Hey everyone, this is Otsu and this is Observations with Otsu. Thank you for joining me for another week. It is roughly the end of June. I think this is the last week before June or before July. And so we're going to kind of look at things. You guys know the drill by now. We're going to look at weekly perspectives on Bitcoin and Ethereum. Sometimes we cover ETH BTC pair. I think we will today since I think that kind of matches well. And then we do a top-down analysis, so we go weekly. Sometimes we hit the 3-day, 4-day. Then we hit the daily, 4-hour. And then sometimes we hit the 1 hour, but usually that's a little too... this is meant to be more of a higher level analysis. If you want something a little more lower time frame, you're probably looking for my casual crypto and coffees on Wednesdays. So that's kind of the intro to this. We've had a very good week, so that's going to play into it. Will we kind of retrace? How do we look going into this? So it's very interesting to go through. If you're joining me for the first time, thank you. But I also have some preliminary things. I'm going to. So I had a very busy week last week, so a lot of things got delayed. First things first, my tactical trading part 4 is going to come this week. I think I'm just, I've already had it delayed by about 3 days, so I think I'm just going to wait completely until this Thursday. So today's Monday for the market, the 24-hour period for Monday. That's going to be this video. I'm going to usually, my Tuesdays I reserve for like Twitter videos, like 2 or 3 minute videos. Wednesdays casual coffee and crypto, and then Thursdays are tactical trading. I'm going to add some more videos in between there. So that's the first thing. The other thing is, very briefly, I am starting the Discord this week. It's a new one. It's in addition to the one I currently have. I have one called Apex Academy. That's where you sign up for a masterclass. That one's currently in hibernation until I launch this one. This one's going to be more of a casual thing. It's going to be and kind of an open conversation about me talking about different trades and things like that. And so it's going to be there's a limited free stuff available for that, and then including a chat room where I can discuss things, and then there's also going to be a paid option where you get access to my trades, trading challenges, things like that. So on top of that, I'm also launching my Discord or my Arun bots this week. That is a paid service because I've routinely have had pretty good numbers on that. So all I ask is a little bit of compensation in return for all the hard work that I've put into that for the past 4 years, and that helps you appreciate other people's work. That's pretty much the gist of that. So all that being said, that's kind of the introduction to this video. I want to keep it short. I want to keep this under 20 minutes, and I want to be held to that standard. So let's just get started. All right, so first things first, we're going over Bitcoin. So again, we do weekly top-down analysis, and then we look at some key observations. That's why it's called Observations with Otsu. And then we kind of look at both a long and a short option. So that way I kind of, I'm bullish right now, and I tend to have one direction over the other, and I'll tell you that. But I also cover both a bull scenario and a bear scenario generally with every video. So that way you might disagree with me, and that's okay. If you do, here's an example. So that's why I do that. So anyway, going to weekly Bitcoin. Let's go ahead and scroll down here. And as you can see, we had a pretty good week. One of the biggest weeks. And funny enough, I was thinking, well, this is probably one of the biggest weeks of the year. Actually, it's not. It's the third biggest week for the year. And that kind of tells you this year has been really good. And so I don't really understand a lot of bearish scenarios and perspectives, and could be PTSD, those kind of things. But overall, this has been a fantastic year. So if we kind of match this up, I mean, kind of cheating here. If we go from the bottom, we're about 86% from the bottom. But if we really go from basically, even if we take the top from January 2nd, we're at 76. So that's a pretty good year. In fact, I think this is the biggest year so far, year to date, as the past 4 years. And so that's pretty good. I like what I see. This is a great start, and honestly, this kind of confirms to me that this is the bottom that I discussed a long time ago, and I think I had it on the 2 week. excuse me. So on this, I had that weekly buy-in with the diversions. It was crystal clear to me. That worked out really well, and it seems to be doing pretty good. I really like this a lot. It doesn't necessarily mean that we won't go lower, but this is promising. Let me go back to that weekly chart here. I just messed this up. So let me see 1 week. All right. So, and then we had the buy-in on the week here. So let's get rid of this for now. The only problem I see, so there's a couple things that I see here that makes me think that we're not necessarily out of the woods yet. I think we're definitely out of the woods as far as bearish market. I'm looking at a consolidation phase leading to markup phase. So I am treating this as a new cycle already. I do not think that we are currently in a bear market. Things have been bullish. This isn't necessarily a signal a bear market per se. I mean, we're up 80%, almost 90% from the lows, and that's, you know, I think that's a pretty good estimate of where we are as far as a cycle is concerned. Also with a 200 EMA, that looks pretty good. We usually only, when we cross down, we only cross up at once, and or we rest on it. We don't really spend a lot of time around the 200 EMA. And it's very concerning to me because a lot of people are like super bullish around these levels, and it's that's the time to buy. Like don't be bearish at the time to be bearish was not at the bottom. The time to be bearish was this deviation or even somewhere around here, right? But here we've already reclaimed this level. So anyway, one thing I do see, however, is that we did barely cross up above here. So this is technically divergent. This is a bear div right here. So it is divergent because we have a higher high here, or we have a higher closing candle, and then we have a lower candle there as well. So this is a little tricky though, because the wick actually closed above it. So we have a little bit of discrepancy. I think it also may depend on your asset exchange of choice, whether this is Coinbase like shown or Binance. So it kind of is a little bit of a gray area. So it's something to take note of, and I think probably lower price action is probably going to be more of a concern with that. I do see, however, we have a high bearish consolidation. This might explain this a little bit better. So when you have these, this is a consolidation pattern when they both go in the same direction, but how tight they are indicates that the price impact may not really have an effect. So you want something wider. You want something like this, and that way you have a big drop like so. The thing is, though, with something like this, it typically, in my experience, and this doesn't happen often, but in my experience, the price doesn't seem to impact very well. So I say all that to say, like, we got to kind of look at lower time frames to give us a good perspective. Another thing that we need to look at is this right here. We have these pairs of wicks. I look at this like so, and so we're kind of in the middle of that, and that even touches. And so that's one reason I thought the deviation here was very impactful, was because it bled into this liquidity issue. You could also ramp it up here because of this area, this small wick, and so that kind of gives us something like so. So anyway, I don't necessarily think that this section here, mainly this section, I don't necessarily think that's going to be an easy pass, basically. So what you want to look at is kind of a consolidation of this. This might take another week or two to play out, unfortunately. So I don't want you to think that we're going to 50, 60K immediately, right? I mean, we're halfway back to the highs. And so I think that's worth considering, that the bear market is pretty much done for now. What we don't want to see is a quick rejection of this. And I think we can kind of go to the daily for that. But before we do, I also want to know that this bounced off the 50. This is something that we talked about in previous videos. And so things are going pretty well. So let's go to the daily. And, you know, we had that reaction from the 50. And sometimes we don't. Sometimes we had it like this, and it didn't work out very well. But this kind of gives us a better example I had mentioned before that we had this right here, and that bounced fairly well. We did have a divergence, but more importantly, we had a wedge. And I told you guys that if it went down, when you have a wedge, and let me just paint the rest of the wedge here like this. So once you have a wedge and you have a support structure like this, it typically jumps down first and then it relaunches back up. So it's a fake out essentially. So when this went down, I bought here on my personal account, and then when it went back up, I knew that was hyper bullish. And so that's what you need to watch out for on your personal trades. If you want to improve yourself, find that one thing that you know that you're good at. Find that one thing that you know you are good at, okay? And take advantage of that. Keep doing it over and over and over and over again. Focus on that one. Even double, triple your risk, because if you think that you're really good at executing that, then you're going to make more money that way versus another type of trade that you're not so good at. See what I'm saying? So when you have this, I knew that when we went back inside, that's a very bullish sign. And so also it gives me an invalidation. If we break down again, I close my longs. But I added heavily, and I just this move alone, my whole portfolio went up 20%, and I didn't even really risk that much. So that's the power of that. And 65% of my bags are now packed for the bull run, and so I'm pretty excited about this. Not really too keen on selling. I'm mainly focused on swings. I got a big spot position, of course, and some of that goes all the way down to here, so I'm not interested in selling. But this is it's a pretty interesting thing. So let's kind of clear this up and see. We got a few things. We got the wider bearish consolidation. So this is kind of telling us that the bears still have a chance to react from this. That being said, if you take the top from this and you take the top of that wick and you slide it over, you have a few different things going on. We did make a high, but we didn't close above that, so it's no bueno. It doesn't really, it doesn't count as a deviation, but it was a rejection. It was just a solid reject, not even that solid of a rejection, more of a soft one. So I mentioned this is that we are stuck here, and we are also in between here. So we're gonna play within this range, I think. So as long as this price action stays above this line, I don't consider that a deviation for this case. This is a little bit of a special case, actually. Once we go below here, I think that we would go to at least 27.9 and potentially even 27.2. But unless we break that, I think that we're still clear for the highs. This is also not quite a reaccumulation pattern, but it's very similar, where you have usually you have like a double top here, sort of. Actually, technically, you have like one hump and then another one that's taller. So this could be it. This could be another one, and then this was your bridge, and then your expansion. Not quite textbook. I don't really qualify it as such, but it is behaving very similarly. So I really like this. Like I said, this level, between these two levels, is what I'm interested in. So right now, as far as long scenarios, so my key observations, I'm still pretty bullish on this. It's stuck between two, kind of like a range, and so the play of that range, like I said, and I usually focus on a play of the range, and that's your safest way to analyze a move. So if you want to long this position, I would probably just wait till we get above here and then target the lower of this range, and you could even target the top of this right here, so about 4.75%, and you could target, I honestly think that if we break this, there's a good chance that we hit 40,000, as long as we get through the weekly on this range here from the 32s, 34s. So if we go back here, this is kind of where my long setup would be, and I'd probably have a couple take profits somewhere in here. That's what I would do for Bitcoin. For that, if I want to do a short position, I would probably wait till this drops right here, and then probably target the mid, I think, because although it's not above this one, it is above this one. And then I'd probably target somewhere like so from right here, or possibly even right here with this pattern, because this is an engulfing of this. That being said, your best R&R here is going to be 2 versus this one is a 6 almost. So that's why I say I focus much more on longs, and it tends to work out better that way. I tend to rather, instead of looking for shorts, I tend to look for places to price action to go down and buy instead. Buy where it'll bounce versus shorting. I like to play just one side, and you make more money as a bull, basically. So that's that. Another key thing is, this is my color band strategy. And so this basically, there's other ways to do this, EMAs, things like that, but this is a general way to tell me when things are bullish or bearish. When this is blue, this tells me that AREN is bullish. So I don't short if this is blue. Like, if this is telling me this is bullish, I would not short. This would be the better time to short. In fact, I actually wait until this line sometimes. So this would have been a key area to short, but it didn't work out, so I got invalidated, and it's fine. Here was a better short, it worked out. Sometimes it does, sometimes it doesn't. That's not really the point of this video. Point is, I don't really see, you don't have to use that script, and that's my script, my script anyway, but I don't really see a reason to short the market when the strength is currently in the bulls. See what I'm saying? You wait until the strength favors a trading position, if that makes sense. So those are the two shorts I would look at. We can kind of look at the 4 hour because we had the bearish divergence right here. Works out pretty good. We have the AL getting ready to form up. So this presents a good key observation that we haven't even quite went really full bear on this as well. So you can kind of look at this. I would probably just look at this as a whole. This kind of gives you a better context. So I would wait until a break of 29.5 to do anything. And so right now, I think this still looks okay. I think there's reason to be cautious, but there's not a reason to panic, right? And so another thing I also see is, even though you have a bear div here, you have a hidden bull div here. You got a higher low, but you have a lower low. And so that tells me when you have a bear div with a hidden bull div, those kind of sort of cancel each other out, and they end up turning into like a reaccumulation phase. So what we've seen on a bigger level here, I think that we could see on a lower level here. So we could see something like bleeding all the way to here and then a jump back up. So I would not be surprised if we, what is today? What is today? Oh, the 26th. So I wouldn't be surprised if we kind of chop slow bleed for the next 2 days, and then we kind of relaunch maybe middle of the week. So that's kind of what I'm looking at. We are above the 50 RSI here, so that tells me that it could also be now. For my fib rules, when you have a complex structure like this, I just use the candle bodies. So if you do the candle bodies like so, we are above the mid. So this looks good to long, actually, for me now, for a small conservative long. And so that's kind of worth looking at. And so that's pretty much the overview for this. And we can kind of take a look at Ethereum next and see how that goes. All right, so on to Ethereum. So the weekly here looks pretty good. There's a few things I want to look at. First is the big bullish candle that we had here. It didn't go for this one, but didn't go over here, so it doesn't really count as a breaker. It needs to kind of go over the whole structure. So overall, this is a pretty solid reaction from this point. Excuse me. We also had this the RSI bounce a couple weeks ago, very similar to Bitcoin, and that's the thing. Like I've mentioned, and I got this from other traders, so it's not my idea, but like the RSI 50 is a very good bounce point for a lot of places. So, and so don't be fooled by that. Like don't think that because it bounces off the 50, it's almost ready to go the other way. Like because the 50 is the halfway point of 100, so it's like, oh, it's already halfway done. No, not necessarily. It's relative strength, so it kind of works out. We just crossed bearish, and I think I mentioned that last video, but now we have a consolidation period. That is really good. You want to see that out of this right now. That tells me that the bears lost control of this area right here. So now the bulls have control. And so what this also looks like is that this, from this top of the candle, so the bulls can't get full strength until they get this high. But the bears also just lost strength from this low. So right now, you need to look at this as a range. And so this the break of this is going to probably determine the next 6 months for Ethereum, and that's the short version, versus what I could tell you about what the Aaron is interpreting. So, bulls, if you guys break basically 21.5, 22, I would not be surprised if we see 35 pretty quickly. Pending this structure right here. If this happens here, I'm not saying that we're going to go down to 3 digits again, but I think it's going to be a very stormy rest of the year as far as like big positions. I'd focus, if it goes back here, I'm focusing on buying long-term spot again versus up here where it's like, all right, we're going to ride the trend. So we'll see how that goes. I think that we are going to have a good rest of the year. I think the rest of the year is going to be green as far as like coming up with an entire year to date. Like I don't think that we're going to be red for the entire year. We could be red for the rest of the year, but not for the entire year, in my opinion. And again, I do think the bottom is in. I think this Adam and Eve structure is very solid. Basically close right around 1,000, and that's a great psychological resistance. See, some of these things are so easy now in hindsight, we didn't think about them at the time. So that's kind of that idea, right? But Adam and Eve structures are very solid. Excuse me, and it almost looks like a cup and handle pattern, but I don't really, use those too much because they're too subjective. So that's kind of the weekly on that. Looks very good. This deviation is still in play, so that's another thing, was we have this deviation and we had that rejection right there, so we need to kind of win this over. That will be a good positive sign to break. So let's go ahead and look at the daily, and I'll just get rid of all those. And so this is a little more complex. You can see here that we've already had basically for the last 5 or 6 days, this is well protected. So this is kind of like our first directional choice. And so for my observation with this is like, this is a conflict between supply and demand, basically. So again, the best way always, you typically, is playing the range. You can play the trend as well. And so with our trend, we a little bit different here. This was the daily though, but for the weekly, we a little more complicated, but we also don't have the price history because that stops at 21. So with this, it broke above the 200, which is good. I'm just going to get rid of that because I don't really do EMAs for this particular strategy. I think this is just as simple as longing this range. If you wanted to be a little more aggressive with your longs, you could do something like this: target the break, target the lows. Excuse me, and then the wherever you want for the ceiling is up to you. For me, and I teach this to Apex members, is that you look for weakness. You don't sell unless you find weakness. And so a lot of people want to sell too early or sell too late. The best way to sell on time is to sell weakness. Okay, that doesn't necessarily, if price goes up and then it goes down one candle, that is not weakness. Okay, that's correction. That's consolidation. A consolidation is not an opposing trend's weakness. Okay, a consolidation is a confirmation that it needs to reload, so to speak. And so that's long story. That's why I have the academy. So that's shelved for another time. But this is kind of what I see for a long. If you wanted to short, honestly, the best time would probably be now. And so you could short here. You have an easy invalidation. I would probably put this here at the top here, and then you could target something like so. Again, your R&R is going to be a lot lower because you're going to have less potential on a short, especially like it's really just kind of a silly idea to sell right now because the market is a little bit strong, despite the red. This is very common on a Monday morning anyway for the market. So anyway, that's kind of that. So we can kind of look at this quickly from a 4-hour perspective. We have a triple top, and this presents a very interesting scenario. This isn't quite something that I wouldn't label it like this, but this tells me that this has some protection, And so if it does go above here, it might teleport a little bit. So something to keep in mind. We have a triple top though, and we have a decrease of strength on the RSI and the AO. So we could see a correction. I think, again, this just goes to say whatever this is, play the break of that, honestly. And if you've seen a lot of my videos, you know that I talk a lot about playing the break of a range, and that's because it works so well. For example, right here, the idea would be to play the break of this range, and that was, even if you got in late, you got in at 1780, and we went basically to 1920. So that would have been an example of, let's say you played this, and let's say you had a market position to target. Let's say you even targeted this low here. If you would have got in here at the top, that's a 3.2. It's pretty good. So, and that's subjective. It's dynamic. It depends in the moment, but you kind of see what I'm saying, right? So that's the analysis for that. And I think it's also going to be the video. I think I'll skip the ETH BTC pair because it's kind of in a kind of a contest anyway. So it doesn't really say anything right now for at least for the next month. So I think it's safe to wait for next time. So anyway, I hope you enjoyed the video. Thanks for watching, and I'll see you next time. Thanks.